Welcome to today's episode. We've joined by David Barrett, the CEO of EBC, an international brokerage known for its award-winning execution, institutional-grade infrastructure, and the global client base that spans retail, professional, and corporate traders. Before we dive into specific themes, David, thank you for joining us. To help our listeners better understand what lies ahead, we've structured the conversation around three key topics: market forecasts, strategies for navigating volatility, and the evolution of brokerage services. Let's begin with the first theme, Mr. Barrett. What macroeconomic trends do you believe will shape the global markets over the next few years?
Thank you for having me. Just one quick correction. I'm the CEO of EBC Financial Group UK Limited and also Cayman Limited. So we are firms that sit underneath the group. We're two regulated entities. Again, thank you for having me. I think it's a really good question. We could probably talk about it for the next 3-4 days, but I'll try and keep it short. I think global politics is probably the biggest single driver of anything that's going to be going on in 2026. If you look at what's going on in the US, they clearly had a political pivot away from Asia and Europe, and they're concentrating much more on Central America at the moment. And that in the last week, we've seen quite a lot of hefty statements out of the US administration on their opinion of Europe. And clearly, they pivoted a little bit away from the Asian presence that they would have had as well. And all of that, I think, is massively important because it's going to dictate the powers in Asia, particularly China, and how they push within their region, politically as well as economically. And I suspect that whole, is globalization changing? Have we re-employed that term and how we use it and how it affects the economy? I think that will continue on. There's no doubt economically deficits, rates, inflation will continue to have a big input. But I suspect a lot of that's going to be driven by the political maneuvering and where people want to position themselves. Deficits are clearly getting out of control, whether you think about that from a Western or an Asian point of view. Countries and politicians pivot away from their existing stances, generally encompasses the need to add liquidity into their domestic economies, and their fiscal and financial policy will be driven by that. Clearly, the other big one in the room is AI. Everybody's talking about it. It's something that seems to be thrown into every conversation. Personally, I'm not sure that the way we're looking at AI at the moment is how it'll end up actually manifesting itself in our life. But clearly it's a hugely fast moving part of the global economy, and it continues to evolve at such a pace that I think 2026 will see probably as much movement in terms of how it looks as we've seen in the last 12 to 18 months as well. So I don't think you can single out one particular thing. I think all of these things will come into play as we go into 2026 and beyond.
Thank you, Mr. Barrett. I can't agree with you more about the AI. Many say actually that this is a bubble, but I think this is pretty small bubble at this stage. Yet it's still a bubble because, it seems that there is not enough computing power at this stage and energy resources to make AI something big. Don't you agree with that?
Yeah, I think it's like any new market, right? The participants will release everything too quickly. It won't be complete or in its final stage when you first see it. I think that promises in terms of size of investment, location, physicality of what they're going to build and how they're going to hook it up is hugely overhyped. I mean, OpenAI is a fantastic example of a company that's promised trillions of dollars worth of infrastructure investment and technology investment, doesn't make any money. It has no proven revenue stream. So I think if you think back, people don't like to compare it to 2000s with the way that the internet bubble bursted then. But I think there's a lot of comparisons because there's a lot of tourists in the AI space, people that are there because they believe it's the fashionable place to be. And I think there's a lot of promises that clearly won't be met in the first stage. So for me, I I think we need to take a step back. We probably need a reset. Whether that means that we're in a bubble or not, I think it depends on which part of it you're in. But I think we need a reset. We need to clear out a lot of the noise and the tourists that are in the area and in the trade. And like the web, you'll have a handful of companies that will come out of that reset that will be the people that really push it forward, really innovate. But, the reality is that we're talking about building hundreds of data centers and thousands of, all of that stuff I think is premature. If you look at where AI was 2 or 3 years ago, in 2 or 3 years' time, we may not need data centers. They may be sticking it up in satellites around the world, as Musk was talking about. You may even be able to run it on your laptop without using a data center. Nobody knows. So I think that pure definition of what AI is at the moment is probably a lot of people's fanciful thinking rather than reality of where we'll end up. And I think we can mention it in some of your questions in a minute, but the market is totally overusing the term as well. Brokerages to attract clients are pretending that it's doing things that it's just not doing. I mean, it's too early in the process, I think.
I kind of agree with you, and speaking of the AI forecast, like we discussed, how should retail traders actually interpret forecasts today, given how quickly narratives shift?
Yeah, I think it's a great question. And I think, the reality is everything should be approached with caution. Forecasting, if you had started at the beginning of the year, April, May, when Trump came out with his trade policies and so on, nobody predicted that. Nobody saw it coming. And there's many things, if you look at that mix of what we spoke about just now, with politics, with geopolitical, geoeconomic kind of evolutions are happening so fast that I think it's incredibly difficult to predict. We're in that time of year where everybody's sending out their 2026 predictions, their small tomes of paper that everybody can read. They're guesses. Nobody knows. And we have so much fluidity in terms of the politics and what's going on that nobody's going to be able to interpret that until it's in front of them. So again, I think caution. The world's extremely fast evolving at the moment. And I think from a trader's point of view, from a client point of view, we're very much driven towards asking them to be flexible, to look at their leverage, to look at how they're exposed to the markets and whether they need to be exposed all the time. For us, clients, we want clients to make money. That's the whole point of us being there to help them. We don't want them to lose money. So for us, we tend to give them a cautious message and try and educate them on the points that could rise in the future.
Yet again, I agree with you. These are uncertain times. Everything changes so rapidly. Something new comes up every day. Some technology arises, AI developing like crazy. And that brings us actually to the second major theme, something every trader experiences firsthand during uncertain times. Are there risk management techniques you believe traders underestimate?
Yeah, I think if you look at how the retail market and the professional market has evolved, if you look at the tools that are available, it's made people be able to access things that they never would have been able to access before. The other problem that you've got is that markets have tended to be very mean reverting. Volatility has been suppressed by policy and by politics. And whether people like it or not, buying the dip has been an incredibly successful strategy for everybody that's done it. There is an underlying feeling that there's a political put on risk as well. So every time the market tends to wobble, something comes out politically that props it up. And I think all of those things have the danger for traders of luring them into a false sense of security. So for me, I think relying on the fact that markets will always come back, relying on the fact that volatility spikes will always come back to the kind of medians that we've seen is very dangerous. And I think part of what we try to do at EBC is we try to push that education thing. We try to make tools available to our clients so that they can understand why things are happening, the breadth of things that are happening in the world, so that they're better equipped to understand when we do get that volatility that they need to manage what they're doing. Education's a really important thing, I think. There's a lot of people that pretend to teach people how to trade. You can't learn to trade until you understand what's going on in the world and why things are moving. So for us, the education point is a very big tool in enabling clients to understand risk management, I think.
Yeah, definitely. Without education, I think this is the reason actually we have more than 90% of new traders losing, because they simply dream of some huge profit within the short period of time.
Sorry to interrupt, but I think it's not just people wanting to dream of huge products. They're sold that dream wrongly. They're told it's easy. They're told if you follow this guy, you're going to make money. They're told that you need to be in markets to be able to make money. Those things, you know, the gamification of brokerage to clients is very dangerous. And I think, you know, EBC, we have a saying where we don't want to be the biggest, but we want to be the best. And part of that is educating people that they don't need to believe those dreams. They need to understand the reality of trading in markets. It's difficult, right? If it was simple, everybody would be sitting on a boat in the sunshine, and they're not. So,
you know, I can't agree with you more again, because from my experience nowadays in social media, you just hear how easy it is to become a trader and start earning. And you know, if you would, if some student would ask you about education specifically, he would ask you, are there any assets you would avoid entirely in these extreme volatile periods? What would these assets be and why? How would you educate your student about that?
Well, again, I think the answer to that is more generic. It has to be a wider view, a wider answer. So each client has its own reason for being in the market. It has its own focus, be it stocks, be it bonds, be it commodities or FX. And depending on why they're there and what assets they're looking at is really should dictate where they go and where they don't. All risk buckets have a use, whether it's commodities, FX, or something else. And it really depends on what the trader is trying to achieve. And again, I think we pivot back to the education part, which is really the client needs to understand why he's doing what he's doing and what he wants to get out of it, not what he's told that he needs to get out of it. I think high leverage, concentration of risk, asset classes that are perhaps not as liquid as they look, and I include crypto in that, are all risk buckets that need to be looked at and be cautious with. You know, if you're in a market that can see a 10% move in 24 hours, you need to be aware of that. You need to understand how that can happen and what it can do to you. So I wouldn't single out any particular product as being highly dangerous, because I think the client needs to choose where he's at, but there should be a healthy respect for the fact that all of them, given certain circumstances, can be very, very difficult and potentially dangerous to a client's P&L.
You know, there is one interesting point. When people actually trade, right, they underestimate or don't understand what is the risk, because it's actually all digital. It's not cash lying on your table, right? And this is kind of a trick of your mind. Mind is tricking you, because it seems you have nothing because it's just numbers. But when you would have a cash, I think many people would actually think about the risk completely different way. So this total digitalization is changing the way actually people look at the risk.
Yeah, I think it's very true. If you look at the way that regulators look at it, so we're regulated in the UK by the FCA, and the FCA has coined a word for it. They call it gamification. So their argument is, and they've actually prosecuted some influencers, financial influencers, and the companies that have used them, because their argument is exactly what you said. People are presented with a product And the reality of that product is not what they're presented with. It's almost like they're paying with artificial chips, things that don't matter. The FCA estimate that something like 80% above or more of people that trade with UK regulated brokers lose money. But I would say in a global sense, it's much higher than that. It's probably in the 90s. And that's because people are pushed into products or are missold the reality of what those products are. And that's what causes a lot of the danger. And I think for brokerages like ourselves, highly regulated regimes in jurisdictions that are respected, we're there because we're trying to get away from that hype of what can be there. I think your point's absolutely correct. It's really dangerous.
Yeah, so it's yet again all about education, understanding what you're doing in the market. And now we've talked about the market environment and how traders can adapt. Now let's look at how brokerages themselves are evolving to support these changing needs. How has the role of a brokerage firm has changed over the last decade, and what do clients expect today and tomorrow that they didn't expect before?
Again, I think the argument kind of pivots back to the education thing. There's no doubt, if we're all honest, that there's been a lot of bad actors in the space. Most of those bad actors have been in non-regulated environments and are very young groups that come in, make a nuisance of themselves, and then disappear with their clients' money. One of the great things about education is the clients are better informed. They're better informed about regulation. They're better informed about product choice. They're better informed about who they should and shouldn't trust. And that expanding regulatory footprint, I think, shows a commitment to doing things correctly. So for me, the biggest change in the brokerage space is that legitimization and being a company that has the trust and respect of your clients when they're dealing with you. Clients come to us, and I had an email chain that I had just yesterday. It's an Asian guy who had come across a website. It wasn't one of ours. He calls us, he asks us where we are. We can point him to, on our website, our main group website, we actually have a tool that allows people to put website addresses in to make sure they're dealing with the legitimate firm. And people have become more aware that that's important and that they should be looking for it. And I think the role of a brokerage now is to be able to show that solid regulatory footprint, and also the product offering is something that's there to help a client rather than to draw them in for nefarious reasons. I mean, we've just recently, we have regulated entities in the UK, in Caymans, 2 in Australia, Mauritius, and we've just launched a new one in South Africa as well. These are not easy ways to build your business. Being regulated is hard. But what we're trying to tell the clients is that we're evolving with their requirement. Their requirement is safety. Their requirement is being able to trust the broker that they're dealing with, and know that things are being done not the easy way, but the right way. And I think that's the biggest evolution. You know, people that sit quietly in the dark corners are being forced into the bright light. And we're ready for that, and we believe it's the right way to go.
When I was starting trading, my main point was always who regulates that broker? You know, because if I see there is some shit regulator, I don't know, offshore brokerage firm, it clearly says to me, don't go there. You know, and I fully agree with you that this is so important when you choose the broker you can trust. And you know, speaking of that, maybe there will be some technologies in the future, you know, to transform brokerage services. Do you think this can play a big part in the regulatory process, or and maybe AI can be used for that? What do you see actually the way brokerages will be transforming in the future? In what direction and how?
I think we touched on it earlier, but AI to me is something that's oversold. It's something that promises things and they tell you that they're doing things with it that they're just not doing. For many people, AI at the moment from a personal point of view, is just a really good Google. That's what they're using it for, right? For people like us, we're trying to use it in the background to build more robustness, more reliability in our technology stack. You know, one of the things that we spend a huge amount of time on is trying to produce hugely robust and reliable delivery to the client, whether that's via the website, via platforms, pricing, interaction with LPs. All of these things build the product, and AI is helping us do that in the background by streamlining processes and making them more robust automatically. But I think a lot of what you see brokerage is selling as AI products are really not using AI in a real sense. It's a way of delivering their platform and creating that impression of what they use. I think there's no replacement for education. Clients need to not just be told you can buy here, you can sell there. If you go onto our website, there's a huge amount of information about what's going on in different economies, what's going on with different government processes, why it affects the price, and why things are moving. And I think that that is another big way that brokers need to use technology to deliver robust information sources. In terms of products, I don't think there's that many new products out there at the moment. I mean, we've seen the likes of Robinhood, who have tokenized stocks, for example. That's all very well, but the real reason they're doing that is because they don't want to do the full regulatory implementation in certain jurisdictions, and they simply want to allow access to a wider audience of existing products. So really, to me, things like tokenization at the moment, for most clients, is a gimmick. And I believe that it's just another way of delivering existing products. So for me, in terms of a transformation in the near future, technology can be a great help in robustness of your platform. But I think the most important thing that you can do with technology is push out that educational, make people able to access more products that are good for them, more information that helps them understand why they're there.
Thank you, David, Mr. Barrett. You just spoke about the tokenization, about the Robinhood who tokenized stocks. And, I would like to hear your vision about this trend. Do you see tokenization being implemented in the near future across most brokerages? What is that trend? How fast we're moving towards that total digitalization and tokenization of everything? Because clearly we're going in that direction. What do you see, how fast it can happen, and will it happen?
So I should start answering that question by saying that I'm a skeptic. I've been in the market for 40 years, whether it's on trading, whether it's running businesses or risk management in investment banks. I have a very broad background. I would say that crypto as a thing, for me, is just a volatility bucket. I don't believe that if it were to be as transformational as people want it to be, the impacts that it would have had on people's everyday life would be much more pronounced at this stage of its development than they are. For me, most people that are in crypto are in it for trying to make more fiat, which is kind of ironic. There's very few people that are in crypto because they believe it is a new paradigm of finance. So if you take my biased kind of view of that, I think the problem with tokenization is it's trying to find a home for crypto. And a lot of people that are pushing it to expand that narrative. The reality is that tokenization, and we mentioned tokenization of stocks with Robinhood. One of the ironic things is that they started off in various jurisdictions with their tokenization of stocks. And the first thing that happened was the regulators went back to them after they started and asked them, what are you selling the client? Is the client buying the stock? Does he own the stock? Does he have any rights over it? Now, that's not necessarily a bad thing, but I guess the point I'm trying to make is that they're merely giving access to something that already exists, and they're doing it in a way that suits them to do it, either from a regulatory or a technology point of view. I think tokenization of products is a thing of the future. I have some friends that are involved in tokenization of property, of real estate, and that, I believe, gives access to people. It allows them to go into markets and have interest in markets that they wouldn't be able to do normally, so commercial real estate and that kind of stuff. The problem with most tokenized platforms is you need an underlying liquidity. So in the real estate example, the problem is you need somebody to act as the real buyer and seller at times of distress, otherwise you get a very biased market. So tokenization to me is something that does have possibilities, but really it's more about allowing people to access rather than bringing a new product in. It's about giving access to an existing risk bucket or product.
It might actually give tokenization access to all the products. It kind of multi-assets, and everyone has access to it. I think it's a great way of getting people involved.
I would agree, but they have access to those products now. You're only tokenizing products that already exist.
All right, but it gives access to retail because they don't have so much money to buy a property. For example, a big house, they can buy a share of it and trade it. So it kind of brings the more retail into the market. Seems like a good marketing strategy.
I would agree, but if you look at what Robinhood's doing, they're tokenizing stocks. Retail can access stocks. You can buy fractional shares. You can do it in a way that are cash delivered, CFDs. You can do it in a way, you can do it through ETFs. You can do it through leverage programs and platforms. If you go on to IBK, if you're a retail investor in the US, you can trade everything. So I agree with you in esoteric risk buckets. Real estate is a perfect example. I think it has real promise. But the problem that they're having with that sector of the market at the moment is underlying liquidity. And in terms of what people like Robinhood are doing, it's great. If people prefer to access it that way, good for them. But it's just a different delivery system. It's not a new product.
Okay, and speaking about all these assets, many traders ask about the future of multi-assets platforms. How is EBC adapting its offering to meet this shift?
So I think really it's driven by client demand. And what happens is that we've expanded our product base based on client demand. So for us, we've launched crypto products, we've launched ETF products, we've launched single stock products. A lot of brokers, if you talk about single stock products, will be offering thousands of stocks. We don't offer thousands of them because the reality is maybe 100 of them see all the volume and the rest of it is just marketing. So really our products and our evolution is driven by the client's request. So ETFs is another good example. People don't want to trade just single stocks. They prefer to have a view in a bucket of stocks within a sector. So we delivered them ETFs because that's what they're asking for. And I think really what you need to do is you need to offer things that people want rather than what you perceive that they want. I mean, very much, I think brokerage now acts as a sieve. So if you think about in the late 90s, investment banking would allow their clients to do everything. Then when they realized that there were constraints, be it balance sheet, regulatory, we had the crash in 06, 07. What they did was they closed up the size of the holes in the sieve, so you couldn't trade everything. And really, if you look, the evolution of brokerages and the evolution of technology used within brokerage access is really the brokerages create a layer below the banking and the big institutions that allow that access for your clients. So really, I think we're here to provide what the client wants. That's our role. Our role is not to sell them things they don't want. It's to respond to demand and give them not only the product, but the information they need to be able to trade that product.
Thank you, Mr. Barrett. Thank you for sharing your insights. Understanding how market behave, how to manage risk in volatile market conditions, and how brokers innovate to support traders. gives our audience a clear view, practical framework for navigating the next few years. Before we wrap up, is there one piece of advice you'd give to traders preparing for 2026 and beyond?
Read, educate, read some, and then find some more stuff to read. I think the big thing about the world, as we discussed right at the beginning, is the speed and the scope of change that happens in such short period of time now is immense, and it changes the landscape that you're looking at. And the only way you can really prepare yourself for that is to educate yourself about what's going on in the world. It's the only thing that matters. Your decision-making process is driven by what you know. Don't listen to what people tell you. Understand it yourself. Educate yourself. I think it's the singular most important thing.
You know, I've heard it many times, actually, that the best investment you can make is investment in yourself, in your education.
I agree. It's true. We're very lucky to have a program where we work with Oxford University, and we recently joined in with one of the podcasts that the university delivers, and the scope of that was about financial education. And your viewers should go and find it on our website or on YouTube. And the professor that delivered his speech was very much driven by people want to learn. People should be able to access the tools that give them that advantage. And I think financial education is woefully under supported, and I think it's crucial to everything. I really do.
Mr. Barrett, what would you advise for a novice trader to start learning? What would be the very, very first stone of knowledge he should get to get interested, to get excited, and to actually start trading?
So I think I've asked this quite often, actually, and for me, it's a process rather than just one point. I think what you need to do right at the beginning is understand what you want from it, what you personally are looking to achieve, not what you're being sold, not the dream of what you can achieve. It's not somebody sitting on the bonnet of a flash car throwing €100 notes about. That's not reality, right? So you should sit down and work out what you're trying to achieve from being involved. And from there, you can then go to the education thing, teach yourself about that sector or that part of the market. And you can then go into the trading side. Before you start trading live, trade on a demo, work out how it works, just to get a feel of what it means to buy there and it didn't go up, it went down, what it means to be involved in the market. So for me, it's not a jump in process. It should be very much driven by what you as a client want to achieve and guide yourself in. There's lots of tools out there. Don't be pressured by people. Do what's good for you. That's the only thing that really matters.
Mr. Barrett, I would add that, just my personal vision is that it's very important to understand where you're going, your goal. But this all media tells you that your main goal should be money. And this is wrong. It can't be. You can't do anything with money. You simply can burn it. You want something beyond the money, what money can buy. So this is important to understand where you're going and why you're going there. So in this sense, I completely agree with you. And education should be starting with that, as you said. I really thank you for being today with us. And I thank to all our listeners for joining us. So stay tuned for more expert conversations, and we will see you in the next episode.
It's been a pleasure. Thank you very much.